Welcome to Global World Watch. Please subscribe and press the bell icon for more updates. Canada, with the world's longest coastline, faced a crisis. Its aging fleet of Coast Guard vessels and icebreakers was becoming unreliable and costly. These ships are vital for Arctic security, scientific research, and keeping shipping lanes open in winter. Domestic shipbuilding was too slow and expensive. Canadian yards couldn't deliver new ships fast enough. Waiting for local production meant risking a decade-long gap in maritime capability. The government needed a rapid solution, so it looked abroad. China, with its massive, efficient shipyards, emerged as the only realistic option. Chinese shipbuilders could deliver the specialized vessels Canada needed in a fraction of the time. The billion-dollar deal included state-of-the-art icebreakers and multi-purpose ships for the Coast Guard. This wasn't just a purchase. It was a strategic move, prioritizing national security over domestic industry. Turning to China signaled a shift in how Canada approached urgent infrastructure needs. But this decision would soon spark a much bigger debate about trade, currency, and global power. China's rise as the world's top shipbuilder is no accident. Massive investment and relentless efficiency have turned its shipyards into global leaders, outpacing South Korea and Japan. Chinese yards now build everything from giant container ships to advanced icebreakers at unmatched speed and scale. Their edge isn't just low labor costs, it's a tightly integrated supply chain and a national drive to dominate the industry. For Canada, buying from China meant tapping into this powerhouse, gaining access to modern, high-quality ships quickly. China's shipbuilding strength is also a pillar of its broader economic and geopolitical ambitions, supporting both trade and naval power. By choosing China, Canada engaged with a nation at the center of global maritime commerce. This deal was more than logistics. It was a nod to China's new industrial might. For decades, global trade has run on US dollars. But China wants to change that, pushing for its own currency, the yuan, to play a bigger international role. By insisting Canada pay for its ships in yuan, Beijing made a calculated move. This wasn't just about money, it was about setting a precedent. If a G7 country like Canada uses the yuan for $1 billion deal, it signals to the world that China's currency is credible for major transactions. Each such deal chips away at the dollar's dominance and boosts the yuan's legitimacy. China's goal: reduce its vulnerability to US financial power and sanctions by building an alternative system. The ship deal is a small but significant step in that direction. As the world's largest trading nation, China can increasingly encourage or require partners to use its currency. For countries wanting access to China's market, using the yuan may become the new normal. The Canada deal is a milestone in China's campaign to elevate its currency. It's a strategic win for Beijing and a sign of shifting financial power. For Canada, paying in yuan wasn't just a concession, it brought real advantages. Agreeing to China's terms likely secured a better price, saving taxpayers millions. It also reduced currency risk. By locking in the yuan price, Canada avoided unpredictable exchange rate swings. This financial stability made budgeting for the billion-dollar project much easier. The deal also opened doors for deeper trade ties with China, positioning Canada as a flexible, forward-thinking partner. Such adaptability could mean future benefits for Canadian exporters in the vast Chinese market. Strategically, it fit Canada's goal of diversifying economic relationships beyond the US. Engaging with China on its terms signals a willingness to operate in a multipolar world. The ship deal was more than procurement. It was an investment in a new kind of global partnership. For Canada, it was a pragmatic step toward economic resilience. In a changing world, flexibility is a competitive edge. The decision to buy ships from China and pay in yuan sparked fierce debate in Canada. Supporters called it pragmatic, prioritizing urgent needs, saving money, and securing modern ships fast. They argued it was a smart financial move and a sign of Canada's adaptability in a changing world. Critics, however, saw it as undermining Canadian industry and jobs, sacrificing long-term strategy for short-term gain. Some warned it made Canada more dependent on a foreign power for critical infrastructure. Others raised security concerns about deepening ties with China, especially for sensitive assets. For critics, using the yuan was a symbolic concession to a geopolitical rival. The deal became a flashpoint for debates about sovereignty, security, and Canada's place in the world. The US dollar has long been the world's reserve currency, giving America unique power and privilege. Canada's billion-dollar deal in yuan is a small but telling crack in that foundation. While most global trade still runs on dollars, this move by a close US ally signals that alternatives are emerging. It normalizes the idea of using other currencies for major deals, encouraging others to follow. This is part of a broader trend, de-dollarization, as countries seek to reduce reliance on the US financial system. The Canada-China deal adds momentum, showing even allies are exploring new options. If this trend grows, the world could shift from a dollar-dominated system to one where the yuan and euro play bigger roles. For the US, that means a gradual erosion of its financial advantages. The dollar isn't being abandoned, but the landscape is shifting. Each deal like this builds the infrastructure for a more multipolar financial world. The Canadian ship purchase is a clear sign. The old order is being quietly challenged. The implications for US influence are profound. Canada's ship deal with China is more than a transaction. It's a snapshot of a world in transition. It highlights China's rise as a high-tech manufacturing superpower, now essential even to advanced Western nations. The deal shows how economic interdependence is forcing countries to make tough, pragmatic choices. The use of the yuan signals the first real challenge to the dollar's dominance in decades. This isn't just about finance, it's about shifting global power. A world with multiple reserve currencies means a more distributed balance of influence. The Canada-China agreement is a signpost on the road to a multipolar future. The US remains important, but it's no longer the only major player. Nations like Canada are learning to navigate this new landscape, making practical decisions in a complex world. The global order is being reshaped, not by grand speeches, but by billion-dollar deals like this one.